Hey, what is up, everyone? Welcome to Market Psychology 101, where we look for value in the markets when there's fear and are cautious when there's greed. In today's video, we are going to be taking a look at the Magnificent Seven stocks, and those are Nvidia, Microsoft, Apple, Amazon, Google, Meta, and of course Tesla, rounding it out. Starting off with fear and greed, it's been going down for the last few weeks, and on CNN, we have finally entered into fear territory. So maybe there's going to be some good value around the corner to pick up. Sometimes these indicators, the fear and greed, it isn't always a one-to-one indicator. They can be a leading indicator. So maybe some good value prices are around the corner. As far as on pie vesting, it does say greed. It doesn't have that neutral territory as much, it seems. So anything 51 or higher, but it is overall in this downtrend. We'll see if it can get under 50 and hold under there for a little bit. So going over to our first Magnificent Seven stock, which is Nvidia. We've been looking at these fib targets, and I drew this Fibonacci retracement from the prior high in 21 to the prior low in October 22. And funny enough, NVIDIA's hit all these fib extensions, 1618, 2618, 3618, and the 4236. Not only did it hit it at 1120, it wicked above it. And this is how crazy this move was. So we've been talking about this because we're going to go over to the daily. It hit this fib level once, twice. I was wondering what was going to happen on the third time. And inside of a couple weeks, NVIDIA went from around 970 to above 1130. We're talking about a company with a market cap that is only behind Apple and Microsoft, near getting closer to 3 trillion. Going over to the weekly, again, you just take a look at this. In a couple weeks, it got here. You can see that little wick. It peaked above and then has come back down. And on the daily, which shows an even clearer picture, and again, how it hits these fib levels, honors them, and comes down. It got above and has come back down. So maybe NVIDIA is going to come back down to the 20. They're going to run into each other somewhere around 1,000. That's a good psychological level, in my opinion. Possibly see some buyers come back in. But again, look at this. This fib level, the 1618 here, it hit once, twice, three. On the fourth time it came up. When it comes back down, it gets to these moving averages and comes back up. Here, much quicker move. I believe this is a 2618. Hit the fib level, came down to the 20, went back up 3618, hit the fib level once, twice, came down almost all the way to the 100 in this lower fib, but got some strength back, and then this move, just the most violent move upwards that we've seen out of this guy in a while. So NVIDIA on a heater right now, and should the market enter a euphoric phase, guys, I would not be surprised if NVIDIA were to get to something crazy like $5 trillion or even higher. Who knows? If we're talking about dot-com bubble euphoria, is it going to get there? We'll see. At the same time, though, look at how far this has come. This is only a year and a half ago. A year and a half ago, NVIDIA was at 110. Right now, it's at 1100. So it did a 10x inside a year and a half. So if you are lucky enough to get in down here, I wouldn't blame you for taking some profits, even if you're a long-term value, patient-minded investor. That's how huge this move is. Now, again, it could go up even higher. Who knows? Maybe this is going to do a 20x when all said and done, and then a big recession is going to knock it back down somewhere around where all this price structure is at around 450. Important thing to note, there is news of NVIDIA doing a 10-to-1 stock split. Those can be macro bullish but micro bearish. So maybe when the stock split happens, it comes down a little before ripping back up. All things to consider. But as far as NVIDIA, would I be buying right now? No, I would not. It's gone up too high, too fast. Yes, there can be money to be made, but it's hit this fib level right here. I wouldn't doubt if there's a little bit of a correction. And I get people asking me in the comments, where do you think this stock or this crypto is going? When do you think it's going to get there? Guys, I don't know, and no one knows. what I try to teach on my channel is a mindset, to have a plan, literally write down a plan. And when the market prices meet the conditions of your plan, you'll know what to do, whether to dollar cost average in, to buy at good deep value areas, or to take profits. Of course, I also preach a budget. I budget a certain amount of money each month that I can play trade with. And if nothing meets the conditions of my plan, I pull that money and I only invest what I can afford to lose. So that is my plan. I want you guys to be making money. I also want you guys to be safe, not YOLOing your student loans, your mortgages, anything like that. So NVIDIA, watch it. It'll probably have a little bit of a pullback here, but could it get back up? I would not doubt that one bit. So NVIDIA, congrats if any of you guys have gotten in on any of these levels, whether around the 400s or even if you were getting in down here when it was in the low hundreds. Microsoft. So Microsoft, it's, as you guys can see, this is the 1618 fib. It tested it, got near it, came down to the 100, tested it, and then came back down to the 100 pretty violently. And for me, this is crazy to think about. We're talking about $3 trillion market cap, and this is what happened in the course of 2 days. And if you take a look at how big this move was, this is around 5%. So think about this. This is crazy. 10% is 300 billion. 5% is 150. So inside of 2 days, 150 billion came out of Microsoft. To me, that's just crazy to think about. 150 billion bye-bye in 2 days. Crazy. Anyways, Microsoft still has yet to get there. Maybe it's still in an uptrend, and at worst, you can see that as we've been going up in this uptrend, that it's come down to the 100, almost the 200. So coming down to the 100-day has been a common area of support for Microsoft. So maybe this is a level to hit before it eventually breaks all-time highs. We'll see. If it comes down to the 200-day at around 384, or the 50-day moving average, pretty close to it, 375, also some price structure, I wouldn't blame anyone for dollar cost averaging in. And for me personally, that's part of my plan. Not financial advice for you, but I'm willing to be patient and wait for those 200-day moving averages or the 50-week, anything at or underneath. And even though when stocks do get under the 50-week, that does signal a switch in the direction, so we were in this bull trend, under the 50-week bear trend. Even if you start dollar cost averaging in here and are willing to be patient, getting at 288, yes, it got lower, but you're getting more excited for lower prices. Dollar cost averaging in at 261, this fib here, 247, the 200 MA at 222. Inside of, let's see how much time it is, March 22 to 23, a year. Inside of a year, you're already getting profits back. And if you were dollar cost averaging in through here, yes, you would have to be patient. Your money would be doubled right now, practically, in one of probably the safest, best stock in the world. So that's what a patient mindset can do. This is when there's big fear in the market and great areas to dollar cost average in. So I won't ever pretend to know where the bottom is, when the bottom is, but there are indicators, and TA, technical analysis, isn't everything. See, a lot of people hate on it. Guys, it's just more tools in your tool belt and ways to help you get deeper value with your hard-earned money. That's how I look at it. I try to simplify it because I think a lot of times people can outthink themselves, out-research, overthink things, and if you've done all your research, then when you check the markets every week or even once a month, these are very simple things you can look for. The fear and greed, the fibs, the RSI, the moving averages. It doesn't need to be much harder than that. Let's go over to Apple. So we talked about Apple when it was at this 100-week moving average. And I mentioned how when Apple's been down here, it's been a rare occurrence, whether it's at or underneath. It's about once every 2 years. And so you can see it doesn't stay down there for long. We're going all the way back to the great financial crisis, the last time it really got under the 200 week. But imagine all the fear in the markets, and if you were buying Apple at $3 to $4. I mean, take a look at where it is now. You would be very happy with that investment 15, 16 years later. So Apple, we're talking about how good a value it was and how rare it is to be down here. And man, this thing got scooped up quick. And for the last month or so, it's been going up. Now, the prior all-time high is around 200. We'll see if it gets back over there. If it does and gets rejected again, you're going to be hearing a lot of people talking about this head and shoulders pattern. And the way people look at head and shoulders is that the distance here to here is from the neck to the head, excuse me, is about the distance it can go downwards. And there's some price structure here as well as the 200 week and this fib line. So if Apple did pull head and shoulders and got down to the 200 week, the 150, the 382, that would be a great area to dollar cost average in. So that's if that happens. Again, we're still going up. Let's zoom in on the daily. In the daily, you can see there's a little bit of a ceiling, a wick ceiling being put in. So and you see a lot of red, even here on the S&P. Man, it's down 41 points, almost 1% overall under the 5,200. So you see a lot of red today. But if it is to go down, then you can take a look at this as maybe the next strong area of support. You have all these daily moving averages, 50, 100, 200, the 786, all at around 180. So if Apple got down there, look at how it bounced pretty well. But you can see here, lower high, and eventually this thing just burned underneath. So watch what this thing does. Over here, I would expect some support, some bouncing, but yeah, if it had further weakness than that, then again, we have some price structure and some moving averages to look for with the 50 and the 100. So those are some good value areas for Apple. Inversely, should Apple get bullish, let's say it does break its all-time high. Let's check a price target. Let me sip my coffee. The 1618 would be at 245, 246. So that'd be the area if things were to break up. The next area to look for. So that's what we got for Apple. Let's go over to Amazon. Now, Amazon, interesting, compared to Google, let's take a look at both. So very similar charts, but Google broke up and through and is headed towards the next fib. We'll talk about that in a second. Amazon, not yet. It came down. Now, it is still in this uptrend. And should you really like a stock and you're looking at areas of dollar cost average in, here we have the 20, and coming up we have the 50. So if it got down there, let's say it's your favorite stock and you're like, every time it's at or underneath the 50 week, I'm going to buy, or the 200 day, cool. Those could be in areas to look for around 166. I think, just with the fib and the support, we'll see, but it's possible it just hits this 20 and then changes trends and blasts right through. So Amazon, it is still in this uptrend. I know it's having a little pullback. Maybe it's getting ready for a violent move. Kind of look at this, how violent. Well, that's COVID. That was after all the stimulus money got injected in it. But maybe a move like this where it starts just, it's consolidating and then boom, it blasts off. So that 255 level would be an area to look for. Let me just triple check, make sure it's off fib. So that 255 level would be a price target should things move up. Google, right now, it is trying to climb near the 1618 at 193 and going over to the daily. I mean, that is a really good, strong looking chart on the weekly. But inversely, I mean, think about this. How many green candles in a row do we have? 4, 5, 6, 7, 8, 9, 10, 11, 12. So 3 months straight, Google's just been going up. And that can't happen forever. And the reason I like the Heikin-Ashi candles, it cuts out the noise. And this thing is in a very strong trend. It hasn't come back down to the 20. So, if the market continues overall to have some weakness, then maybe it comes back down to the 20. It also has the support around the former all-time high, a little bit of price structure here at around 153. But again, the next target upwards would be around 193, where I would not be surprised to see some profit taking. So possibly some good areas to buy coming up from down here with this 50 and the price structure. Maybe by the time this does get down here, if it does, these two will meet. But otherwise, this looks pretty bullish. So we will see. If again the whole market's going through a little bit of a 5% pullback, don't be surprised if it comes down here. Meta, Meta. So this one didn't quite get up to that 1618 fib at around, let's zoom down here, at around 566. It has come down to the 20-week moving average, and it does have this red weekly sell signal. So should it get down, look at this. We have the 50 peaking just above the former all-time high line. So there's a couple areas of support. And as long as we bounce or stay above the 50, then we're still in a bullish momentum. So most of the times you'll just see these stocks as they climb, bounce off the 20, but occasionally they do test the 50, and those are the beginnings of areas for good deep value investing. Here, looking at the daily, you can see a clear picture. It's between the 50 and the 100, and right now it went down to the 100. Now, maybe it'll get down to the 200. You can see here again, a little bit of price structure, 200, and yeah, that'd be around 406. So these would be some bearish targets around 404, 406, and the major bullish target where I would expect some decent profit taking around 566. Let's finish off with Tesla. There's one of two ways you can look at Tesla. Let me sip my coffee again. Nice. Drinking good coffee. I don't know about you guys, but I like to French press my coffee, drink it straight, and I'm drinking this Costa Rican one. It's pretty good. Tesla, overall, it's in this giant wedge pattern, and I think by the time this thing gets done in this wedge pattern, it's going to tell us which way it's going. Now, is Tesla a car company, an automobile company, or is it a tech company? People feel free to argue in the comments below. I believe it's more of a automobile company because where 90% of the profits comes from, but it does have long-term potential to completely change the way that we see driving in this country. So Elon, whether you love him or hate him, he swings for the fences, which is something I admire about him. And yes, he makes a lot of promises he doesn't keep or are ridiculous, but I do like how he swings for the fences. And he talked about how long ago, I don't know if you guys remember this, but he was saying that by 2020, we're going to have 1 million Tesla robo-taxis out on the road. Obviously, that didn't happen, but let's say that does happen. Even by 2030, maybe he's late by 10 years. Things like that, electric self-driving cars and most people not needing to drive anymore in the cities, that would revolutionize and change the way that we see driving. So that is a bullish long-term narrative. The bearish narrative is this is a automobile company that has right now around 10 times the market cap, the stock market cap of Ford or General Motors. It used to have 20 times that. Not just that, it has half the revenue. Now, Tesla's balance sheet looks great. Should there be a bad recession, this company is very strongly suited to survive, unlike a Rivian. Rivian would probably get bought out by a company like Ford, but Tesla would be strong suited to survive. Now, it's interesting to me how on this chart, we have these macro lower highs, these higher lows that even hit the 100, we have to go to the monthly, that even hit the 100-month moving average. Now, Tesla had a huge move up in a very short period of time. We're talking about almost 3,000%. That's insane inside of 2 years. So 3,000% move inside of 2 years. That's why I wouldn't be surprised to even see it come down even more. If we were to draw a fib, let's take a look at this. I'm just curious where the 0.5 line would be from this low to the high. Because sometimes stocks, cryptos, they'll go up, they'll have a 50% retracement. So that 0.5 line, could it come down to 69? Imagine all the memes about that. You know, Tesla, Elon, they love their memes on X. So, of course, that number would be 69. But anyways, that could be a possible target. I do see sometimes, or oftentimes, I should say, the stocks move up, come down to the 0.5 fib, and then come back up. But right now, this is bearish. Just looking at the charts and on the weekly, even though we had this big buy signal, we're sitting on this 382, which is a good bullish thing. There's a lot to battle in here. We have the 200, the 50, the 100, the zero point 0.5 fib. There's a lot for the stock to battle in here. Should it get above? I think that's looking pretty bullish, and it would not surprise me to see it hit and get above this downward trend line. But it has to get through this. Now, should things get down and fall through this trend line, then look out below. And if we even take a look at the timing of this, I find this curious. We'll see if any of this plays out. But if you take a look at as this wedge is tightening up, and by the time it's going to decide, look at the date. It's right after the election this year. So it is the market setting up for these stocks to move in a very bearish downward way, or even bullish after the election comes in. People insert whatever narratives they will on, certain president being better for the economy than the other one. Who's to say? But it's just kind of curious how this wedge pattern is shaping up to the timing of that. So we'll see if that even plays out. It's possible this thing just rolls over before that or spikes up. Who knows? As I was talking about with NVIDIA, maybe euphoria hits the market and a bunch of money floods in before they pull the rug. So we'll see. Anyways, guys, I hope you enjoyed this video. The Magnificent 7 stocks. I try to add more than just basic technical analysis. Anyone can do that. You can do that at home with TradingView. Again, what I'm trying to teach here is a mindset, and I will never pretend to know when or where a price is going to go. What I will do is show you the tools that I use to try to simplify how to look at stocks in a way that can help you find value with your hard-earned money. So I am a patient long-term investor. I've done my research. You guys need to do your research too. Again, literally, if you haven't already, write down a list of stocks. I highly recommend stocks that you like, really like, and of products that you use. So you have that insider information. You have a competitive advantage. You know if the product's getting worse, that it's not a stock worth continuing to put your money into. But again, what I'm looking at here is where can we find value in the long term? Are things getting fearful? Are stocks getting oversold? If you're a huge Tesla fanboy, then this is super deep value for you. If you love this stock, this is great long-term deep value. If you believe this thing's going to be around for another 10, 20 years, then you're like, you know what? This is great value. I don't care if it goes to $69. I'm going to be putting in money right now. I believe it's going to go higher. Good on you. But you got to like the stock. You got to love the stock. And we look at some tools to show us where that deep value is and patient approaches we can take to try to capitalize on that and not stress over it. Even if there was a bad recession, if there was, then we can take a look at that and go, well, hey, there's great value here and I'm going to buy in, whereas others are not. So right here, Apple, great financial crisis, went down 60%. If you're buying in on a stock and it goes down 50%, those are the times to feel excited about getting into it. We'll put this one on the weekly here. But even when the sky's falling, then people are hating on stocks from every different direction. Those are the times to get in. So anyways, again, we're trying to adjust our mindset, have a plan, have a budget, don't invest more than you can afford to lose so you guys can get some good value from your hard-earned money. I don't make any money off this channel, and I take how should I say this? I don't take even me putting out free content lightly, because I hope and I want my message to help people make money. I don't need to make any money from this, but if what I'm saying is helping you guys make money and take a look at stocks in a realistic way, then that's something I feel proud of and good about. I see way too many channels out there on YouTube that have ridiculous predictions that I believe are influencing people to lose money or to overextend themselves. And that is why I made my channel. I believe that there needs to be more people with realistic mindsets, conservative mindsets, patient mindsets. It may not be the the videos with the most views or the highest ratings, whatever. I don't care. I'm just trying to offer a breath of fresh air on how to look for value in the stocks, and I hope that's something that helps you guys out there. I really do. So, anyways, happy Friday. I hope you all had a great week back. It's hard to go back to work after that long Memorial weekend. Thank you to all who served. Summer is right around the corner. We got June tomorrow. Can't believe it. Time flies. So hope you're all doing well. Enjoy your weekend. Take care.